Welcome back. You're watching Stock Watch with me, Zinati Guma, and joining me to take your stock-related questions tonight are Willem Oldewage from Nitrogen Fund Managers and Jean Pierre Verster from Protea Capital Management. Be sure to send your questions on email at stockwatch@bdtv.co.za or via SMS on 41392 or on X using the hashtag StockWatch. Gents, let's get down to business. I don't want to bore anyone with anything to do with expectations for CPI. We'll see that tomorrow. Let's get down to some of the questions, the questions that we've gotten today. Let's actually start off with Amplat, a panel's view on Anglo American Platinum. JP.
Yes, good evening, Zinati. So I don't know if you saw the announcement, but just after the close, Anglo American said they're going to place about 5% of the Anglo Plat shares to shareholders or to anyone who wants to apply, basically. So Anglo American are selling a 5% stake in Anglo Plat to shareholders. That's in advance of the unbundling and separate listing of Anglo Plats on the JSE and London as part of the defense strategy when BHP Billiton made some moves to potentially merge with Anglo American or buy the core of Anglo American. So look, if you look at the platinum space, still tough. We still have, even though pure EV vehicles have sort of taken a bit of a back seat, you say.
Yeah.
The hybrid vehicles have taken over and are growing strongly in sales. So with less internal combustion engine vehicles being sold, that's less need for PGM metals to put in the catalytic converters. So I'm not really bullish the platinum industry in general, although Anglo Plat is the lowest cost producer. So if you want to take some exposure to platinum, Anglo Plat is probably the way to do it.
Yeah, lowest cost producer and also a good balance sheet as well. Willem, on your side, what are you making? Of course, with this announcement that Anglo is giving away, selling 5% of Amplat's shares to shareholders, but also really just on the PGM stocks performance. So would you be going for it at this time?
No, I would not. I think all the PGM metal markets are severely depressed. There are commentators who say there's still deficits in the demand-supply sort of spectrum, but in terms of the spot prices, none of that has shown. In terms of Amplats, like JP says, they are the lowest cost producer, but they also have a large overhang in the next 12 to 18 months, because as JP correctly pointed out, they are going to be unbundling the whole AMS holding. So not that excited about AMS at the moment.
All right. I hear you, gents. Not too much. There's talking about people who are not fans of stuff. There's a viewer who is definitely not a fan of Spar. Okay, let me read this. What a disaster is Spar Poland, billions lost. When will executives of SA companies tame their egos? It's mind-blowing to me that many of the same directors who approved the Polish foray still sit on the Spar board. They still earn their exorbitant salaries for what? No accountability here, and shareholders must go with the flow. If I did my job like that, I would be fired. Let's talk about this overhang of Spar with Poland, JP. Do you think that nobody should be on the job at this point, considering what they've lost and still what they're losing, even with exiting that business?
Well, there's a few non-execs still on the board, but there have been significant changes, and the previous CEO is not there anymore. So it's the new CEO, old Anglo Swartz, has come in, and he must sort of clean up after the previous CEO's forays into Poland and Sri Lanka and a few other places. Look, at the time, no one thought it would be such a disaster. They almost got Poland for free, and there was a narrative that said, wow, if they can just make sure that some of those retail stores buy from them as a wholesaler, they can fix it, and they got it for free. But unfortunately, then they took on a lot of debt that the South African balance sheet effectively guaranteed, and that's where the problem came in. So yes, sometimes if you get something for free, that's still too high a price, and that's what happened in the case of Spar.
There's no free lunch. Willem, what did you make of, because investors had been for the longest time happy that Spar is finally getting rid of Poland, but of course when the announcement came out, there were all these costs involved. with that? I mean, before, the final announcement, people were saying, maybe this would be a good time to go into Spar because they're actually cleaning up shop. But now with this exit, what does it mean for you?
Yeah, so in terms of the regional transaction, I mean, that's by the by. That's in the past, and there's nothing as a shareholder you can do about that. I think in sort of defense of the board, you can say that there was a likelihood that it would be a good transaction, a bad transaction. The fact that it turned out to be bad doesn't mean that was the higher likelihood. So I think that is worth taking into account. And then in terms of the current proposition, I think what they're doing is the right thing. I don't think Spar's, it's a speculative investment. I don't think there's sort of a clear catalyst and there's sort of immediate value unlocked in the company. But in terms of sort of actions being taken, swapping the CEO, selling Poland, which is a massive drag on earnings and on finance costs, it does make sense. So I think they're on the right path, but I don't necessarily think that means it's a good valuation at the moment.
JP, are there no low-hanging fruits for Spar to get a significant boost, at least in the next year?
Sure. The lowest hanging fruit is probably to fix their SAP implementation and get the DC systems working again. And they're working hard in terms of that. So I would say that would be the low hanging fruit because because they're basically, you can call it a wholesaler. I mean, they've got these huge DCs, distribution centers. And the moment you are not efficient in picking and packing your DC and distributing via trucks, and there's delays, and one store wanted baked beans, but then they get tomato sauce, as an example. Then you can't sell. So that's terrible. So that would be the low-hanging fruit for them.
All right. Willem, with that being said, the viewer says, what is the panel's international retail pick? So seeming that the viewer maybe is not quite a fan of the local retailers, would you be looking at international retail companies, Willem?
I don't generally, but I very much like Amazon, which is a global retailer of not really food, but at least of sort of consumables and goods. And then I thought while you were speaking, in terms of sort of acquisitions that have worked out, Truworths, which is a clothing retailer, acquired Office in the UK, which has done really well in that business.
Yeah.
So, I mean, they're not all that bad.
Yeah, interesting. Not everyone's really been burnt overseas. JP, any international retail pick that you'd be looking at?
Yeah, there's a few I like. In the UK, there's JD Sports Fashion. They sell athleisure and other very fancy sneakers and athletics gear. In the US, I like Ulta Beauty. They sell cosmetics and beauty products. And then I like the car parts retailers like AutoZone and O'Reilly. And they've got wonderful returns, and it's you can't always buy these car parts at any retailer, and you need to have a very wide inventory because there are so many different cars with different parts. And that means there's a wider moat in that type of retail versus just selling food or clothing, I would say.
All right. Well, let's go into hospitality. Sun International. Can you ask the panel's view on Sun International's reporter yesterday? And is it still a buy? I'm trying to think. Yesterday, the share price was up. Willem, so assuming that people were still buying yesterday, would you be going in the same direction?
Yes, in terms of the sort of South African hospitality, I think most of the results were good. The occupancies were sort of in line with expectations. If you look at something like City Lodge or Sun International, I think with Sun International, there's a bit of an overhang because they are looking to acquire Piedmont, which is sort of subject to regulatory approval. So I think there's sort of an investor uncertainty related to that transaction. But as an overall company, the results are good. The trend is good in terms of sort of South African exposure to hospitality. But I think in that case, the catalyst or the sort of key element is going to be how the Piedmont transaction plays out.
Well, actually, the second part of that question was also your view on Piedmont. JP, how would you be looking at, Piedmont's impact on Sun International?
Yeah, it's a land-based casino, so it's an interesting one. If you look at the results of Sun International, the part that did the best was SunBet, which is the online business, the betting business. While the physical casinos and even the limited payout machines didn't do as well. So I'll throw in another name, Tsogo Sun Gaming. Between Sun International and Tsogo Sun Gaming, I've historically preferred Tsogo Sun Gaming, but I've been wrong because Tsogo Sun have been behind the curve in terms of betting and an online offering, and that's why you saw a lot of players like Hollywood Bets and a few others that aren't listed in South Africa that have really made a lot of money. And the listed players have actually lost out. But Sun International have done the best of all the listed players. If you bring in the old RACP, that gambling business, Gold Rush, that's another gambling business. Then of all of them, Sun International has done the best because of Sunbet, I would say.
Yeah, I was actually, sticking to you, JP. I mean, yes, they did say that, the growth in the land-based casinos wasn't that great, but they did say in the big regional, in the big ones did better than the smaller regional ones. So maybe Piedmont would also be part of that. It's still going to show growth for Sun International?
I believe so. It's still a very good casino. I mean, right next door to the OR Tambo International Airport, very well situated. So I don't believe it's a bad acquisition. It's just that from a capital allocation point of view, I would rather see more money going into betting and an online offering versus more money in physical. But I still think they'll get a reasonable return on the capital employed to acquire Piedmont.
All right. There's a question here on Old Mutual. It did post a trading update today. The viewer says, surely should benefit from interest rate cuts. They did seem to produce a good number. Well, was it actually good numbers? Because I was actually confused with the adjusted headline earnings and the normal headline earnings per share. Yeah, actually, Willem, just go through that because I didn't even know which metric to look at.
So they did report a trading statement update with quite a few numbers. I think in terms of sort of, for us personally, you look at the most normalized, most headline, recurring, most diluted HEPS. And that number looked like it grew something between sort of 10 and 18%, which is good. But the share price has sort of priced that in up until now, up until sort of 13 Rand. And it does lag comparables such as Momentum and Sanlam. So I think it's a fair update, but I'm not sure that there's that much upside in terms of the current share price as it did price in a fairly positive environment for life insurers.
All right. Jean Pierre, you did like this together with Willem on the Old Mutual trading update. Your thoughts on Old Mutual?
Yeah, a little bit of this, a little bit of that. So there were some strong bits, but some areas might have looked stronger than what they really are, as Willem also mentioned. And that's because insurance businesses have got exposure to the market, equity markets, fixed income markets, and that's quite volatile, or it can be quite volatile, that type of earnings. And that's why they normally give you a number which is just the pure, call it financial services, the insurance business excluding movements in markets that has an effect on the assets of the insurer, and then they give the impact of the market separately. So the impact of the markets boosted Old Mutual in this period, as it has done for all the insurers. And in a lower interest rate environment, if interest rates get cut, on the one hand, that's good because it could lead to better persistency, which means that people are under less pressure, so they don't cancel any of their life or even short-term policies. But on the other hand, there's less interest income on the excess cash that an insurer has on its balance sheet. So that's also a double-edged sword. If interest rates move too sharply, it can be bad. But if it's a moderate decrease, that should be net slightly positive for all life insurers.
All right. Well, let's go into healthcare. Is there a high road for Aspen, Willem?
Yeah, so Aspen reported, I think, maybe a week or two ago, and the market did not receive the results well. I think the share price is maybe down 10, 15, 18%, including today. There's a lot that needs to be done for Aspen to justify its valuation. So it's not an undemanding valuation, which means there should be some sort of growth or a high return on equity. And lots of that's dependent on filling contracts. So the contracts do exist and the capacity exists, more and more importantly. But in terms of making sure that comes through, up to date, those promises are partly fulfilled, but not fully. And I think the market has maybe lost some patience in terms of sort of, kicking the can down the road. So when are we seeing these returns coming from these sort of manufacturing capabilities? There are really interesting things that Aspen are looking at, as things like one-shot syringes that are sort of highly innovative, but they're not currently being sold. So there's a lot of promise, but no returns at the moment, which I think has been a bit disappointing for some long-term shareholders in Aspen.
So, JP, do you think that if you are going to go into Aspen, you must actually just take a long-term view, just buy it and then shut your eyes for maybe 3 years?
Yes, and you must believe that they are going to fill their capacity. And the capacity is basically, it's a generic version of these weight loss drugs that are currently very popular, but patents are being held by Novo Nordisk and Eli Lilly, a big Danish and a big US company. And Aspen are positioning themselves to fill the syringe for a generic competitor that will come in as soon as those patents start expiring. So if you do believe that this generic drug will be as popular as the branded drugs have been, and they'll fill millions of syringes, then yes, close your eyes, and 3 years later, if you open them, if they fill those facilities, Aspen will have done very well.
All right. Well, it seems that something some of us have also closed our eyes on, because it's been happening for a while, is the case between Tiger Brands and the claimants for the listeriosis tragedy. There's a question here. Has Tiger Brands made provision for the listeriosis claim? Is this public knowledge or anything like that, Willem?
I don't know specifically, but I cannot think of a management team that would not take a sort of real liability potential and not provision for it. So I'm pretty sure they provisioned for it when the original claim or the original accident happened quite a while back, and especially when the lawsuit was filed. I'm fairly sure they would be fully provisioned for that.
I mean, that stock has also been on quite a run, JP, and I'm wondering if there is still an overhang from the listeriosis tragedy, because, I mean, news keeps coming, but it seems that the stock isn't really affected at this point.
Yes, Tiger Brands does have insurance cover for events like this. So I think the uncertainty is, to what extent will the insurance cover actually pay out relative to the size of the total claim if the claimants are successful? I think that's the major question. So what the share price reaction is telling you is, at the moment, shareholders generally think, oh, the insurance is going to cover it, even if Tiger Brands loses the case.
Yeah.
So there's not going to be a huge liability for Tiger Brands. As far as I remember, they have mentioned a contingent liability, which means there could be a portion that is not covered by insurance that will then need to come out of Tiger Brands' bank account. But it's so speculative now to try and think how much of that can be. Although if you watch the news the last 2 or 3 days, it sounds like the lawyers acting on behalf of the group of people who are affected feel they've got a very strong case. So I think it's going to be quite interesting to see how this plays out.
All right. Well, gents, let's go into mining. Is Exxaro a buy based on its 11% dividend for 3 years? Exxaro, Willem?
Yeah, so I think the 11% dividend historically makes a lot of sense, but forward-looking, I'm not so sure. I think their last dividend was quite a bit smaller, and their last results also about a month or two ago. And then you have to look at the two sort of main drivers for their business, which is iron ore and sort of coal prices, both of which have been under a lot of pressure, which is due to the sort of slowdown in the Chinese economy. So iron ore is drifting around $87 to $92, which is what most players are seeing as a base for sort of the current demand supply sort of shape. And then coal prices, it's an energy factor. And if you look just at something like Brent crude sort of very recently, I don't see a lot of sort of positive potential. So the last little business is Synergy, which is the wind farms, which is doing great, the sort of wind powered electricity. But in terms of the current portfolio, I think Exxaro did very well in sort of an expectation of continued sort of very high dividends. But I'm not convinced that's going to continue. On top of that, their stake in iron ore is Sishen Iron Ore Company, where Kumba has just announced the UHMS capex, which means that will probably also be a smaller dividend from that very large associate. So in terms of the forward-looking, I don't think you can use a dividend yield of 11% at spot to value Exxaro. I think if you use a dividend yield, you're going to have to look at something a little bit lower to justify the current valuation, maybe 6 or 7%.
Yeah. Jamie, what do you think of this duo, coal and iron ore right now?
Yeah, two interesting commodities. So coal, I think, was in a bubble because of the Russian invasion of Ukraine, but Europe very quickly moved away from coal and Russian natural gas to natural gas imports and other sources of natural gas. So for a short while, people thought they're going to use a lot of coal. But it was basically for one winter. So I'm not that optimistic about coal. We know about the environmental impact of coal. It's terrible for the environment. We still need power, though. So maybe the next one is going to be nuclear. So maybe buy some uranium rather than coal. And then on iron ore, it goes into steel. That goes into mostly building of infrastructure and residential units, housing, especially in China. The Chinese property market has taken a turn for the worst. So yes, maybe India will take over. India also needs a lot of development. Maybe they'll be the next big iron ore importer or steel importer. But maybe the best days of iron ore are also behind them. I don't think they were in a bubble like coal, but I do think perhaps the best days of iron ore are behind them. So these are two commodities where the future might not look quite as good as what the recent past was.
Well, talking about the future and the past, there's a question here on a Metrofile. I don't know how closely you look at this one, Willem. Is Metrofile a buy at these levels? Maybe are its best days behind it? I can see that even today was down 5%.
Yeah, so I don't know the specific sort of catalyst for Metrofile. I've looked at it a long time ago.
Yeah.
And to be honest, the sort of the valuation and the liquidity and all of the sort of factors around it made us fairly disinterested. So that's sort of the summary I can give you. I don't think there was anything specific that looked like there was a massive value unlock coming.
Yeah, and I guess also that would make sense for the stock being down this much today. JP, Metrofile?
So they came out with a trading statement a few weeks ago that was disappointing. Then they announced the CEO is resigning, and then they delayed the full year or the results announcement. So that's not great. It's a document management company, and if you think about technology and where we're going, we are using less and less paper. So for a while, I thought that for legal reasons, people still need to have copies of documents. But what has happened recently is people are e-signing documents. So it's not like you sign a document on paper and then they can scan it and give it to Metrofile to put in a box somewhere. You're not even touching a piece of paper. So there's nothing that goes to Metrofile, or at least the paper-based part of the business. So they need to move the business to a much more E-type business, but then they compete against the likes of Microsoft and a few others that do these things internationally and can give you a data lake of e-signed documents. So it's an interesting, I would say, strategic pivot that they need to make. And hopefully the new CEO that they've just appointed can take the business forward.
All right. Well, let's go into your stock picks for today, gents. Willem, what are you choosing?
I'm choosing Omnia, the chemicals and mining business. I think they have a very good management team, which over the last 2-3 years had an excellent track record. They were definitely exposed to the mining cycle, which is maybe something we sort of just said we're sort of concerned about in terms of sort of iron ore and coal, but too much sort of much broader commodity base, as well as the fact that they're not linked to the commodity price. They're linked to the producer's sort of output costs, which generally slow sort of in a much less volatile fashion than pure play miners. And then there's sort of a real interesting catalyst. There's a company called Hypox Bio, which is a Swedish explosive company, which is cleaner, safer, quicker, which is sort of coming on board and has real potential to boost earnings. With all that said, it's trading at sort of a 7 to 8 times forward PE, and they paid this year also about 10% in dividends. So I think that's sort of a golden ratio. If the dividend yield is higher than the P ratio, it's a very simple sort of protection in terms of the downside, and then there's lots of catalysts for the upside.
All right. JP, what are you choosing?
My stock pick is a US listed company, Booking Holdings, and they own the platform Booking.com and a few other smaller platforms like Kayak and OpenTable and Agoda. But Booking.com is the major money spinner for them. And I would hope that any viewers who have ever wanted to book a hotel or accommodation, especially in a far off city or town, have decided to go to Booking.com because it is the world's dominant tourist and travel booking platform for accommodation. And being the dominant platform, it means that after COVID, they went through a tough time with people not traveling. That has come back with a vengeance. People are traveling again. A lot of businesses, or rather cities around the world, are more negative about Airbnb because they don't like the short-term rentals that pushes up property prices. And that could also, in a sort of roundabout way, benefit Booking.com, which is more hotels focused than individual accommodation as Airbnb is. Very good cash flows, very good management. And as long as people will move around and travel, they're going to book stuff. And if they book stuff, they're going to go to a platform like booking.com. So if they can keep their dominance, I think it's a share to put in your bottom drawer, and you can do it well over the long term.
Well, you've got me wanting to spend my money that I don't have. Thank you so much for your time, gents. Really appreciate the insights today. That's all for tonight's Stock Watch. Thanks to our guests, Willem Oldewage from Nitrogen Fund Managers and Jean Pierre Verster from Protea Capital Management. Up next, the close. Stay tuned.